Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, so far the first week of 2024 has not been pretty smooth, but a lot of volatility has accompanied the markets. In fact, we've also seen weak global cues that have kept the index on a leash as well, preventing it from scaling the elusive 22,000 mark. However, yesterday we did make a smart recovery in the markets. But the question is that will the uptrend sustain? We will help you navigate through the latest market trends. But first up, the top headlines we're tracking for you this hour. Indian blue chips are likely to consolidate in a sideways to upward band on Friday as traders refrain from taking aggressive longs ahead of the weekend and concentrate energies on high beta stocks. Price volume and momentum-based rallies continue in cash counters as traders and investors find out newer stocks to punt on the long side in a roaring bull market. Extreme caution is advised in stock selection and selecting trade setups. Very good morning to all our viewers and good morning, Shail, as well. Well, yesterday, the expiry of the Nifty really panned out to be without any jitters on the index, and that was a good part. It managed to recover some of the 200-plus point fall over the last two sessions as well. The Nifty crossed 21,600 and sustained above it as well. It also closed near the highest point of the day. But the question is, can this range-bound Nifty week really end on a higher note?
A very good morning to you, Sakshi, and a very, very warm welcome despite Delhi's coldest day yesterday to Market Today and on Business Today Television. Sakshi, let's look at the positives first as usual. So for 2024, the Nifty marked its first daily gain. We are sitting on Jan 5th. So the first 3 or 4 days have been terrible, and the Nifty snapped its 3-day fall yesterday, as you rightly mentioned. It was the weekly expiry as well, and we had seen 3 days of consistent build-up of shorts in anticipation of further profit booking. Be that as it may, you have the graph in front of you. And you'll notice that 3 days of consistent falls, the Nifty's almost corrected 334 points, Sakshi, from the all-time high of 21,834 to Wednesday's low of 21,500. Now, yesterday's rally was a combination of short covering. It was a combination of a technical snapback. You know, normally what happens is that rallies or falls last for 3 days or 5 days. These are all Fibonacci numbers. And therefore, there is a snapback that happens. Now, tomorrow is the weekend. It's unlikely that traders will continue to take fresh long positions. And even if you look at the components of the Nifty that rose, you know, none of them were super heavyweight stocks. There was FMCG, there was Pharma, there was a record high on Cipla, Sun Pharma, on Tata Consumer. These stocks are good, but they have a meaningless weightage on the Nifty to push it forward. So yesterday's was a snapback. It was a technical, how should I say, rebound after a 3-day fall. And it seems that markets are still awaiting January 11th when the first quarterly results for the third quarter will be out, led by, of course, Infosys and TCS. So my presumption is that today's will be a flat kind of a trade. There is 21,600, 21,500 on the Nifty options chain, which offers a decent support. Sakshi, when you look at the structure of yesterday's market, there isn't much to talk about. Of course, the PCR ratio on the Nifty was so low that a bounce back had to happen, and that is in place. So my understanding is that apart from Nestle, which is again an index lightweight, but in very heavy news because today is the last day of the record date, which will determine shareholders who will be applicable or allowed to have that stock split. Apart from that, I think it's likely to be a quiet day, sideways to flat for the index. No point buying the dip, as the overseas cues are flat as well. And my presumption is that we'll have a nice uptick from Monday onwards, of course keeping in mind that it's the quarterlies that are in focus now. Sakshi.
Absolutely. Now, when we talk about the Nifty Bank, Shail, not only did the Nifty Bank Index outperform the Nifty yesterday, but it also closed above the 48,000 mark as well, a level that it hasn't managed to sustain on a consistent basis as well. Now, the index also snapped the 4 days of losing streak as well. But for the week, it will need to close above 48,292 to ensure a weekly gain. Are we on course for that?
Well, Sakshi, let's just say that even on the Bank Nifty, you've seen 4-5 days of consistent selling. And like I mentioned, after a 5-day fall, a normal snapback occurs. So if you look at the amount of correction, we've corrected 1155 points. The high was 48,636. That was struck on 28th of December. And the low of Wednesday was 47,481. So that's a difference of 1155, which is, a fairly decent kind of a punch down that you've seen. And yesterday was, the, how should I say, the first weekly trading day of the Nifty Bank weekly expiry. So fresh positions went in, and of course all shorts were cleared out the previous day. If you notice on Wednesday, on Wednesday, the index actually closed somewhere near the day's high after a fairly decent fall. Now, only Sakshi, just two stocks are doing pretty well on the Bank Nifty, and that's IndusInd Bank, a very, very sharp breakout there, as also something of a, mood changing happening on ICICI Bank. The rest of the banking fraternity is quiet. Of course, you have the PSU banks which are bringing up the rear in terms of trading momentum, in terms of delivery trades, but the index heavyweights are quiet. HDFC Bank, ICICI Bank, Kotak, SBI in particular. So I don't see any great shakes happening here. Again, we are at ahead of the weekend, and the fact that there's quiet, tepid trade there, no volumes to talk about. So that is something that I look at, that let's pay attention to the cash stocks and let Nifty and Bank Nifty rest for the first 10-11 trading sessions of January. When we began this conversation on 1st of Jan, you mentioned a statistic saying that January traditionally has been not in favor of bulls if you see the last 10-15 years of data. So, let these first 10-15 days pass peacefully. जितना कम छेड़ेंगे बाजार को उतना ज़्यादा अच्छा होता है. ये मैंने notice किया.
Fair enough, Shail. Now, that's as far as the Nifty and the Nifty Bank is concerned. In the F&O space, are there any stocks one has to keep an eye out on?
Sakshi, there's heavy activity there. Can you imagine 11 stocks are in the ban? No. 11 stock futures are in the ban. That essentially shows that the kind of bullish demand that is there in the market. So, stocks like GNFC, Hindustan Copper, National Aluminium, Steel Authority, Z, Delta, India Cement are all in ban. So, the best you can do is square up your trade on whatever side you are on. But very, very heavy momentum in public sector enterprises within the F&O sector. And of course, I'll pay attention to, stocks that are hitting record highs like Sun Pharma, like Cipla. Those are long side trades, and as we've mentioned over the last 1 week, that the rally in the pharma space is led by not only large caps, but a very, very fond move coming on the likes of Glenmark and Aurobindo Pharma. I would imagine that those dips should be purchased. There are no stocks which are technically overstretched within the pharma space. So far, it looks like a sectoral move, Sakshi.
Okay, it looks like a sectoral move. Let's also now focus on how the global cues have been shaping up. The US markets ended mixed. It was the fourth day of decline for the S&P 500 on Thursday, while the tech-heavy Nasdaq 100 dropped for a fifth day in a row. Its worst showing since December 2022. The Dow closed marginally higher on the day, but is still down for the week as well. When we talk about all the three major averages, they're actually all on track to break the 9 weeks of a winning streak. So the global cues coming in from US are not that very positive. When we talk about the Asian markets, again, they opened in mixed trend on Friday after the selling pressure was seen weakening the US stocks as well, and the bonds as robust signals from labor market weighed on expectations for the interest rate cuts as well. Now, as far as you can see, the Nikkei up by about 0.4%, Hang Seng slightly up in trade, it's the Kospi slightly down in trade, so it's a mixed trend in the Asian markets. As far as the GIFT Nifty trends are concerned, muted start is what is we are expecting for the Indian markets today. As far as the flows are concerned, the FI has bought shares worth 1513 odd crore rupees. The domestic investors sold about 1387 crore rupees of stocks on January 4th as per the data as well. Now, as far as some of the stocks are concerned that you need to keep an eye out on, of course, yesterday was dominated by the real estate stocks. The Realty index ended at the highest level in 15 years. Most of the stocks in the realty space also ended at record high levels. So we will keep an eye out on the second day in a row on the real estate stocks, especially Sobha Limited, the stock that rallied about 15-16 odd % yesterday. It reported its best ever sales quarter in Q3, reaching a value of 19.5 billion rupees. And the new area sold stood at 1.66 million square feet as well, with Bangalore achieving its highest ever quarterly sales too for the company. So that's going to be in focus. Shree Cement is going to be focus because it's one of the largest cement manufacturers, and it's now announced a corporate brand overhaul with Bangur as the master brand going forward. So we'll keep an eye out on that too. J&K Bank has come out with a report which has reported a substantial 11.8% year-on-year increase in the total business. So a business update there that may keep the stock in momentum today. RBL Bank's Q3 business update also reveals significant growth in key financial metrics. Total deposits standing at 92,743 odd crore rupees, marking a 13% year-on-year surge as well. Advances also surging for RBL Bank. Grasim is going to be in focus. The board of Grasim has approved about 4,000 odd crore rupees to be raised via rights issue. January 10 has been fixed as the record date for the rights issue as well. Lupin is going to be in focus. The pharma major has received a tentative approval from US FDA for its new drug applications as well. Jupiter Wagons is going to be in focus from the railway space. It's got 473 odd crore rupees on an order from Defence Ministry as well. So these are some of the stocks that I'm watching out for. Shail?
Yeah, Sakshi. The other thing I wanted to mention was that, there is, as I've said, a crisis of plenty as far as the stocks and other news are concerned in the cash market. And my assumption is that traders will focus on those developments. There are nice brokerage upgrades and good quality broker reports coming out on stocks such as Gas Authority and Gujarat Gas from Morgan Stanley. There is an upgrade on IIFL Finance from Motilal Oswal Securities. There are more reports coming in on government companies where the government is looking to get a very high dividend payout from cash-rich PSUs. So there is absolutely no dearth of news when it comes to looking at stocks at the long side in terms of what is a roaring bull market unfolding in front of us. And that is the limited point I wish to make, that you might see the Nifty Bank in the green maybe, but there are other opportunities in the market that offer, how should I say, a better risk-reward ratio on the long side. And it's Sakshi's and my duty to bring them to your attention. Sakshi.
Absolutely, Shail. Let's now welcome our guest on the show. Kiran Jani now joins in. He's the head of technical research at Jainam Broking. Kiran, very good morning to you, and happy new year to you on air as well. Tell us, what are you focusing on in the current market scenario? It's been a volatile week so far, but what is the trend suggesting to you?
Very good morning, everyone. And we are meeting first time in 2024. So wishing you both, Shail sir and you, Happy New Year, and all the viewers, Happy New Year. Now, coming to the market setup, we have seen a small profit booking session since last couple of days. And yesterday we have seen market has opened with the gap up and then really sustained and closed the near days high, both the indexes. Now, coming to the FII's data, first of all, index side, we have seen FII has created a long position, 377 contracts, and we have seen they have cut down the position on short side also, 1000 contract. Now, yesterday we have seen the VT expiry of Nifty, and it was a far good expiry. Nifty has managed to close about 21,600. Now, coming to the next VT expiry PCR ratio, Nifty PCR ratio is 1.01 and Bank Nifty PCR ratio is 1.21. Both indices PCR ratio in bullish zone definitely. Coming to the technical setup, if we check Nifty, Nifty is supported by 21,400 level, and it is now on intraday chart. We are seeing that Nifty is back to high top, high bottom pattern. Now coming to the options data, 21,600 and 21,500. Put writers are very aggressive, so any dips towards 21,500 will be the buy opportunity. Keep a strict stop loss below 21,450 or 400. Until Makar Sankranti, we can expect target of 22,000 or maybe 22,200 on Nifty side. So it's a short-term positional view. Now coming to the Bank Nifty has a similar pattern. We have seen that the Bank Nifty retested its 20 days moving average and created a bullish pattern, candlesticks pattern on daily chart. Now, considering that pattern and the bullish divergence on momentum indicator, we are expecting price target of 48,500 to 48,600 till Makar Sankranti again. So even on Bank Nifty also, any dips towards 48,000 or maybe 47,800 would be the buy opportunity. Keep a strict stop loss below 47,500, and we are expecting target range of 48,500 to 48,800 till Makar Sankranti. So on both the indices, buy on dips would be the preferred strategy.
Okay, these are the views that Kiranji offers as far as the index is concerned. And नमस्ते किरण जी, उम्मीद की है किरण जागी आपको देख के कि लॉन्ग साइड ट्रेड्स काम करते हुए दिखेंगे। नव वर्ष की आपको शुभकामनाएं और उम्मीद करते हैं कि आप हमारे साथ जुड़े रहेंगे आगे आने वाले कई हफ्तों में, कई दिनों में और इस पूरे वर्ष में। एक और मित्र का स्वागत करते हैं, मयूरेश जोशी साहब हमारे साथ जुड़ रहे हैं। Mayuresh ji, good morning. A very warm welcome to you. This is your first appearance in 2024, and a happy new year to you. And we hope that the stock picks that you have mentioned, which I have noted down in 2024, work far better than what they have done in 2023. Our Bhujia man is with us, Bikaji Foods and Parag Milk. So let's just understand what Mayuresh thinks of sentiment on the last trade. The first daily gain coming in on 2024 on the Nifty. Mayuresh, what are your views? And once again, a good morning to you.
Morning, morning Shail sir, morning Sakshi, morning Kiran. First time 2024, so here's wishing all of you very healthy, wealthy and prosperous 2024. And I hope 2024 is far better than what we witnessed in 2023. Coming to where the markets are at this juncture, obviously I think we are in the midst of extreme optimism as we speak, and data points are probably supporting this optimism to a large extent as far as the domestic cues are concerned. So the GST numbers, the expectations in terms of direct tax collections, the expectations in terms of the current account deficit being far lower, and for us to manage our fiscal deficit means that the macros are one of the best in the global economy as we speak. When we come to micros, obviously earnings will start from a Q3 perspective, but our take is that earnings should remain relatively consistent and stable. And with all the incentives that the government is probably providing and is expected to provide as the interim budget unfolds, and a full budget probably takes place in May, June, the capex support that will probably come through is going to lend a huge leg up for growth, stroke manufacturing, stroke infra-led activities, and therefore private capex will follow suit. The other reflection is obviously corporate debt to GDP has come down significantly, almost 32% from 68% almost a decade ago. And therefore, the financial stability report, where GNPAs, net NPAs have come off, is also a very healthy sign. as far as private capex, government capex, and the entire wheel of propping up the GDP quite significantly in the next few years. So I think the structural story, Shell sir, continues for India. With the expectations of rate cuts at some point in the second half of this calendar year, FI flows should also resume towards emerging markets and specifically India within this pack, along with the retail domestic investors who have kept faith in the market. So no domestic cues which will probably provide a downside risk to the markets. It's global cues, probably geopolitical tensions, spike in crude that might have some upheaval in the markets globally and locally. But I think markets, specifically in the Indian context, should bounce back very, very smart.
Okay, very good morning to you, Mayuresh, and Happy New Year as well. The markets look like in a fine fettle. Fundamentals for India are strong. It's the only overhang from global that we have to keep an eye out on. But in this kind of a scenario, which are the stocks that you're betting big on for 2024 then?
Sure. So I think I'm sure Shelter is going to note that in his little brown book. And something from the PSU banking pack is something that I like. Our take is that A, valuations are very, very attractive, and B, the expectations in terms of steady growth at a steady state over the next few quarters should probably continue. So within this pack, Bank of India, Sakshi, is something that we like at this juncture. What you've probably seen in the past few quarters as a testimony to most PSU banks within its peer set as well, the asset quality pressures have come off very, very steadily. GNP is at 5.54, net NPA is at around 1.54, and that is expected to go down even further. The NIMs are maintained around 3.05. The expectation is they might just hover around this range over the next few quarters because obviously you've got a scenario where you've seen deposit rates go up and advances rate have not gone up in that same proportion. But as the rate cut scenario unfolds at some point in this calendar year, the incremental benefit also comes back very, very sharply. The other element also is that tier 1 ratio is about 12.5%. You've got provisioning which is at 90 odd percent. I was hearing the con call and recoveries and upgrades is something that the management feels very, very optimistic about going forward as well. A percentage of their deposit base is largely retail, Sakshi, and therefore if you look at their cost of funds, it's somewhere around 4.35 odd percent on an overall composition, and that lends a very, very healthy support along with credit deposit ratios at 77 odd percent. And therefore, with the SME2 book, which is very, very marginal as we speak, it has come off quite significantly. Our take is that at 1.12%, if it goes below 1%, they're in a very, very strong position to report steady state earnings growth. So Bank of India is something that we continue to like. At Markets with India, the EPS RS ratings looks extremely strong as per our ratings and rankings. The other one is something that I'll continue from last week. Elsa just referred to me as a Bujia man, but I think I'll go rather with Parag Milk Foods. Our take is that this industry is going through a significant and a structural shift. Very few listed players, to name a few, their peers like Heritage Foods, Dodla Dairy, have a large part of their portfolio coming in from liquid milk, which is again sensitive in terms to how milk prices probably move. Parag Milk has a major proportion of value-added products, more from ghee, cheese, and the mix of paneer as well, where the manufacturing capacities account for almost 64% of the top line. The only issue that probably lies is that the retail reach is not as great, and therefore the B2B business is there with restricted margins. But as the B2C business grows, then the management is very hopeful to take its retail outlets from 4 lakh units to almost 15 lakh units over the next 15 months. That can have a tectonic shift in terms of the margin profile. They reported 7.2 odd percent. The expectation is that with a change in the strategy that they're probably deploying and expected to deploy, and the addition that they've probably got in terms of VAP products already on their books, 20% market leadership in ghee, 30% in cheese, that can very well, that augurs very well in terms of margin expansion, which can be far better in the next few quarters. Consumption as a theme selectively should do well. Packaged foods as a category where Parag probably also falls in, is expected to do well over the next few years. So I think I'll continue with last week's call of Parag. The targets are anywhere between 20-25% from a medium-term perspective. And we obviously keep a safety margin at 8% stop loss on all our investments that we probably suggest. Clear disclaimer from my side, not anywhere in my personal portfolios. what I've suggested is to clients to our reports, clients may have holdings in this.
Okay, so there you have it. Bank of India, Parag Milk Foods, the top two picks, the first picks that Mayuresh has shared for 2024. So keep an eye and, of course, a detailed analysis as to why he has chosen these two stocks as well. What we'll do is we'll take a quick break. When we return, we'll also take the stock picks with Mr. Kiranjani as well. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Market Today with me, Sakshi and Shail. Also with us is our special guest, Mayuresh Joshi, and also Kiranjani. Kiran, to you, two stock picks that you can share with us for today.
We are seeing that many stocks are at the previous breakout level and they are ready for the new upside. So there are two stocks we are like to highlight today. First is the C8 tire. If you check the daily chart of C8 tire, we have seen earlier stock has given a breakout from double bottom pattern, and after that we have seen last week that breakout has retested with 20 days moving average retesting. And if you check the volume wise, volume is superly boosting up since last couple of days, and we are expecting C8 tire to give a super rally in upcoming time. So at current market price, we would like to go long on C8 tire, keeping a stop loss below somewhere around 2420, and in short term we are expecting target of 2500 on C8 tire. Another stock is Z Entertainment. Here also we are seeing that price was consolidating with the high volatility. But every time we are seeing whenever price is making a low, those are the higher lows. So it's seeing a continuous upside pattern. Stock price has retested its 20 days, 50 days and 100 days moving average in last week only. And now we are expecting prices to move above 300. So the entertainment at current market price, we can go long for the target of 300 and we would like to keep a stop loss of 284. So C8 and ZIL, both are the intraday as well as for the short term, we can go long.
Okay, Z Entertainment is on the verge of a breakout as far as the daily charts are concerned. The price that you see 2090 was last observed on 12th of December. So nearly, a 5-6 week high is what you see on Z Entertainment. And let's see whether this one breaks or not, because you have the same price somewhere on August of 2023. So if this breaks, then of course it's going to be a 4-month, 5-month high on Z Entertainment. Time to look at pre-open trades. Nifty is opened with a bang, 126 points higher. Let's see what are the stocks that are contributing to this sharp uptick, at least in initial trades. We'll focus on the index heavyweights first. Remember, this is a technical snapback that's happening on the index after a 3-4 day fall. Okay, let's look at what Reliance is doing. Reliance is flat, 25.96. HDFC Bank is up 0.7%, 17.02. Infosys is down 1.5%, 14.90. So these are the three index heavyweights. Now we'll shift focus to what has been moving and where momentum already is on the long side. Okay, let's look at ITC. It's 0.5% higher, 490. Remember, we are tracking the 400 call, 470 call for you as far as the long side trade is concerned. Bajaj Finance was the top Nifty gainer yesterday. It's up 0.5% even now, 77.49. Let's look at the 1% uptick on Tata Motors. There is a change in digit, now 803.70. This is a consistent outperformer all of 2023, and it continues to be in the momentum. Let's very quickly focus on some other spaces. There has been an upgrade in defense, especially on Hindustan Aeronautics. Okay, 2980, 2.6% higher. What else is moving in the PSU basket? Some names have been mentioned in research reports. Okay, NTPC 2.3% higher, 324. Gas Authority 1.8% higher, 116. I'd just like to look at the FNO space as well before we approach Kiran for his ideas on how the pre-open is shaping up. As far as the top gainers are concerned, okay, Nestle, it's a record high, 3.77% higher. This is the top gainer on the counter, 28.14. Please, when you look at this number, this is not a 24,302 rupee fall. This is an adjustment to the split that has happened, which in front of you looks as 10:1. Lupin, Sakshi mentioned a news report on type 2 diabetes drug being approved, 2.8% higher, 1438. You have Idea Cellular 1.5% higher, 1705, and REC, IOC, these are the stocks that are ticking up. Let's look at the top gainers on NSE 500 and then we'll shift base. Okay, Torrent Power, record high, 3.8% higher, 1054. Minda Corp, this is also one of the favorites that Mayuresh has often talked about, 388, 2% higher. Chemical space is buzzing, Sumitomo Chemicals 411, 1.45% higher. Okay, let the prices settle. Nifty is now 21,710, an uptick of 52 points. My first question to you, Kiran, is IndusInd Bank. Massive breakout yesterday. Maybe this is something of a 4 or 5 year high on the counter. What are your expectations from the charts? Yes, this is the highest since April 2019. What are the charts on IndusInd Bank telling you?
So coming to the IndusInd Bank chart, or even I can say private bank space, since last couple of months we are seeing that private bank are boosting Bank Nifty at a higher level. In private bank sector also, IndusInd Bank is outperformer. Of lately, HDFC Bank and Kotak Bank has started rally. However, IndusInd Bank at current market price look extremely bullish setup. As you mentioned that lastly we have seen this rate in 2019 only, where IndusInd price was in correction mode. Now 1600 is the important support, important resistance level earlier. Stock price has closed above those level. And looking at current market price, stock price is into the extreme overbought zone. So the buy recommendation is there, but on dip. So is there any dip somewhere around 1600, 1620? We would like to go long, keep a stop loss below 1600. And looking at the current market price or overall chart setup, we are expecting prices to touch 1700 in the upcoming time. But buy on dips would be the preferred strategy.
Okay. This is the view that's coming in on IndusInd Bank. Mayuresh, your view on this particular banking franchise? It's been a quiet performer and is now coming in the limelight. Any view on the fundamental balance sheet of IndusInd Bank that you'd like to share?
No, we remain extremely optimistic. Two counts. One, I think the entire balance sheet construct, as you rightly pointed out, is obviously in the right direction. The advances growth should be very, very stable going forward. What you've probably seen in lieu of the RBI circular, there might be a marginal hit as far as the next 2 quarter numbers are concerned in terms of some elevated provisioning that probably happens. But Tier 1 ratios and overall capital adequacy remain extremely strong. It's a well-managed franchise as we speak, and therefore asset quality pressures should start dwindling downwards. The risk-weighted assets as a percentage of the overall balance sheet is extremely sound as we speak. And therefore the entire mix as we look at things, advances growth should be very reasonable, NIM should be stable going forward, and the expectations in terms of asset quality pressures dwindling downwards means a thrust in terms of return ratios. Again, from a valuation perspective, it's not as expensive compared to a few of its peers, which makes it a very attractive risk-reward proposition.
Okay. Mayuresh, your thoughts on Nestle? We are seeing this price for the very first time today, and after a long time, the sixth highest price stock in India is now more affordable for a lot of Indian investors to take a part in. Would you advise them to go ahead and be a part of the Nestle story now at a more affordable price at 2760?
Yeah, the price has become affordable. The valuations have remained the same, actually. So
Yeah.
the overall construct that probably comes forth is how are numbers going to get delivered. And obviously, I think what we've been hearing from management here say is that a whole host of new products are expected to get introduced over the next few quarters. They're also trying to expand their direct distribution reach in order to prop up their margins. And with that in perspective, I think the different business segments that it works out of infant foods, confectionery, you've got chocolates. They are leaders and having moats in their own individual segments. But I would like to watch out, Sakshi, specifically for these quarters numbers from not just Nestle, from a whole host of FMCG companies.
Yeah.
We've seen rural under the distress. We are seeing signs that there might be some element of pressure on volume growth. And if that probably plays out, at least for a quarter or two, my sense is there will be some element in terms of price action that will get played out onto these stocks as well. So it's a structurally strong story with strong modes, but I would watch out for Q3 numbers. I would advise not to take any action.
Okay, got that. That's as far as the take on Nestle is, especially
Sakshi?
on a day. Yes, yes, Shail.
Sakshi, let's just discuss Nestle a little bit more. Remember, this was one of those top trending things that had happened over the last 10 odd days, ever since the date of the split was announced. So it's a 10-for-1 split and in front of you. And what's really interesting is, over the last 10 years, ever since I have been watching the stock, actually I've been watching the stock for a very, very long time, but in close detail over the last maybe 12, 13 years. And each year, the stock has returned 18%.
Yeah.
So it's a 18% CAGR over the last 10 years. And it's always, always been expensive. Long ago, we used to have an ad of Hindustan Unilever, in which a lady used to always say, सस्ती चीज़ और अच्छी चीज़ में फ़र्क होता है और वो फ़र्क आपको इन काउंटर्स में दिखेगा. It's very, very difficult for any analyst to say buy, because these are very, very expensive stocks on the kind of how should I say valuation parameters that we look at. I think it's trading how many times book? Price to sales 14 times, right? Which basically means that price divided by market cap divided by sales. So that is something really huge here. Dividend yield is nothing to talk about, बहुत ही कम मिलता होगा. But look at the price to book, it's 69 times.
Yeah.
So these are really, really expensive stocks. But over the long term, as in India, quality has delivered super, super normal returns. One of those lovely charts that Kiranji will confirm and confess. They start at the bottom left of the chart and move to the top right. Look at the monthly chart of Nestle. It gives you nothing but comfort, and that's the reason why you enjoy a hot Maggie when it's deep winter in Delhi. Kiranji, your view on Nestle long term?
Definitely, as you mentioned, that it's a beautiful chart to look at. The prices started from left side to right side. It's just an 45-degree trend line. What we learn on technical side, that if prices is rising on 45 degree, it's a completely bullish setup, and whatever dips are coming, it has to be buy. Now coming to this price action, today we are seeing that prices settle somewhere around 2700 because of this overall corporate action. If we check the daily time frame chart or a weekly time frame chart, the levels come somewhere around 2500 now. So 2500 is the overall support after today's price action. If anyone would like to enter into the Nestle, 2500 would be the level we are seeing for the entry.
Okay. All right. On that note, I'll ask all three of you to tell me which is your favorite Nestle product that you've consumed over the last 15, 16 odd years that you've been watching out for. Starting with Mayuresh, which is your favorite Nestle stock? product?
So it's more than me. I think it's my daughter, and she likes both Maggie and Kit Kat.
Oh, okay. Kiran, what about you?
So I have two products. Of course, my son definitely likes Maggie, but for me, it's coffee.
It's coffee. All right. And Shell?
So, Sakshi, I start my day with a black coffee from Nestle. Remember, they have two varieties. One is that granular one, which is really good. And of course, Maggie. And let me confess, the best Maggie is when you sprinkle a lot of bhujia on top. So, piping hot Maggie with Bikaneri bhujia on top. No,
So, a
I'm not
combination
joking.
of Nestle
I
and
can cook
Bikaji
this for
Foods
you,
is what you
right?
need in your portfolio.
And Shelsar, some of the
बाकी
oregano
कॉम्बिनेशन
from
की
Domino's.
बात नहीं करेंगे भुजिया के साथ.
देखिए, और थोड़ा oregano जो Domino's से
हाँ,
आता है, जो हम लेते हैं.
आप बिल्कुल सही कह रहे हैं.
Wonderful.
Yeah.
Wonderful. That's like a perfect Tadkedar portfolio that we are creating for all our viewers, I'm sure, on Business Today.
And to be absolutely ethically right, we will be having this combination with black coffee, not with any other spirit. If people can get this hint, so Maggie, piping hot Maggie with bhujia on top and black coffee. इसमें सब लोग खुश रहेंगे.
Wonderful. All right, 2 minutes to go before the market
ladies
open.
and gentlemen, let's focus on some more prices. Let's focus on some other prices, Sakshi. It's a nice, decent pre-open time. 21,705, 47 points higher. Flat on Bank Nifty, 50 points on the green. Let's look at some high beta stocks which are moving as far as prices are concerned on the green side. I'm looking at Indian Hotels, 467, 1% higher. Paytm 1% higher, 674. Zomato is something we need to focus on, 131, 0.9% higher. What else is moving? Let's look at the PSU pack. I'd like to mention, okay, we've discussed this, most of the stocks that we've discussed. Let's look at rail stocks, what are moving here. We had a strong move. BEML 2% higher, 29.50. A very quick chart check from you, Kiran. Anything in the pre-open space that catches your attention?
There are two stocks catches our eyes. One is the BEML, as you mentioned, and another is the IRCTC. Stock specific, if I choose, IRCTC would be the preferred choice above 900. You would like to go long for the today's intraday or even a short-term time frame. Keep a stop loss below 890, and looking at the current market price, the flag pattern is turned out. Then 950 would be the target for IRCTC.
Okay, so IRCTC and BEML from Kiran. I have 10 seconds for you, Mayuresh. What are you looking at in pre-open? Just 10 seconds.
So I think some of these PSU stocks, power-related ones, NTPC, Coal India, whatever.
Okay. Okay, ladies and gentlemen, a mild uptick, 53 points higher on the Nifty, 21,716. Bank of India, Nifty Bank, 114 points higher. IT is opened with a 120 point uptick. Nifty 500 is 72 points higher. Okay, let's look at what the Nifty is doing in terms of its R1. Okay, it's above R1, 21,707. Okay, very quickly. It's a nice shade of green as far as the index heavyweights 10 are concerned. Reliance is 0.5% higher, 2608. HDFC Bank is 0.4% higher, 1698. How about Infosys? Flat 1513. Index is gathering steam, 77, 80 points higher, 21,737. Okay, which is the top gainer in the index heavyweight space? It's Tata Motors, no surprise there. 0.5% higher, 800. We have Bajaj Finance, 7744. How about the private sector banks? Axis Bank flat, mildly red. ICICI Bank is 0.2% higher, 989. Okay, let's shift focus immediately to FNO. and look at stocks which are moving apart from the index heavyweights. Okay, ladies and gentlemen, it's a new high on Hindustan Aeronautics, 3005. It's an upgrade coming in, 3.5% higher. Okay, what else is moving in high beta? NTPC 2% higher, 323. Hind Copper 1.35% higher, 281.90. Gas Authority 1.4% higher, 164. You have Tata Power 1.2% higher, 341. Okay, which are the stocks in Nifty which are moving in the green apart from the index heavyweights? It's the auto day today. Bajaj Auto 7005, 1.2% higher. This is rising on the back of buyback announcement. Hero Motors 1.2% higher, 3993. No disappointment when it comes to December volume sales, which were below expectations. Okay, Wipro 0.5% higher, 455. The Nifty is now gathering steam, ladies and gentlemen. 86 points higher, 21,750 in front of you. Okay, Nifty 500 top gainer, NHPC 7% higher, 73.70. Let's look at other stocks. CG Power there is an upgrade there, 3% higher, 479. Fairly decent moves in the market. Now let's go to Kiran Jani. Kiran, would you buy 21,700 Nifty call for this week?
Looking at current market price, I would like to wait for some dip, honestly, because 21,700, 21,800, the highest call rating over there. So for any options trade, I would like to wait till 10 a.m. If 10 a.m., after 10 a.m., Nifty call price, just a minute, I'm putting. Yeah, 21,700 monthly call if we check, and the daily and the weekly one is 21,700. Okay, it's somewhere around 147. So looking at current market price, and as I mentioned, the 21,700, 21,800 is the call writer maximum open interest over there. So if any supplies comes and call prices drop somewhere around 120 to 110, that would be the buy opportunity for 21,700 call, keeping a stop loss below somewhere around 90 rupees. Buy zone as we discussed 110, 120, and looking at chart, we can expect prices to touch 180 to 190 level. So it would better we should wait for 120 or 110 level.
Okay, fair enough. Let's look at some more prices. It's the Nifty Auto Index that's firing away, and you can see it rising almost 0.7% higher. So stocks like Bajaj Auto are the top gainers, almost 2% higher. Hero MotoCorp at 4,003, it's 1.5% up in trade. Samvardhana Motherson up by almost 1% now at 104. You have M&M that's moving higher. By almost 1% again. TVS Motors 0.9% up in trade. Eicher Motors 0.8% up in trade. So all of these auto stocks are clearly buzzing. In the F&O action, you have HAL as the top mover at 3% higher, with UBS initiating a buy on the company with 3,600 kind of targets coming in. The stock, currently the stock price is hovering near 3,016 odd levels. You have NTPC, Hindustan Copper, Tata Power as the other majors, and Indraprastha Gas now ticking higher in the F&O action as well. As far as the banking space is concerned, you have RBL Bank. That's again seen a Morgan Stanley target price of 250 on the stock. That's moving up higher in trade as well. In the broader markets, of course, you have CG Power. And of course, you have Alok Industries, IFL Finance. That's also got an upgrade from Motilal Oswal Financial Services, target price of 800. So that's the one that's ticking higher in trade as well. You have Concord Biotech, Global Health. These are the stocks that are up by 1.5%, 2% higher. Also, the PSU banking space, that's moving higher. And Mayuresh, I'll take your view here because you mentioned about Bank of India. That's the top mover on the PSU banking index today. So kudos to you for talking about this stock. Of course, yours is a long-term view as well on Bank of India, 1.1% higher in trade. PSU banks, your thoughts?
Remain constructive, Sakshi. I think two aspects here. One, the asset quality pressures have come off significantly and are expected to dive downwards or southwards even more as we speak. The second element in terms of the deposit franchise is pretty well spread out. So as an example that I gave for Bank of India, the retail TDs are close to 45%, which means the overall cost of funds remain very, very manageable. in spite of an interest rate scenario as well, which does not put too much pressure on NIMs and spreads as well. In a scenario where rate cuts will start taking place, and as the repositioning starts happening on the deposit rates as well in the rate cut scenario, the NIM expansion will happen quite significantly for these spaces. The provisioning is extremely elevated, and therefore any recoveries upgrades, I think the general thesis across PSU commentaries, specifically the tier 2 PSUs, where recoveries and upgrades is where the extreme concentration is happening. And that directly adds on to the bottom line because a lot of provisioning has already been made on a few of these assets, resulting in better ROAs and ROEs. Let's also not forget, they are in early stages basis yet as we look at active markets with India with very powerful EPS RS ratings, which gives us the conviction that earnings will still continue to be stable enough for the entire pack. So yeah, I think it's a constructive story we have.
Okay, let's look at where the market is ticking, and let's get Kiran back on the screen. I'd like to focus on Z Entertainment. Remember, this is the pick that he began the conversation with. I think there's a breakout, 1.7% higher is what I saw it ticking in front of me. I think we are in luck. Kiran, very quickly, Z Entertainment and then Bank of India. Let's look at that as well. I think we are in a double luck today.
So coming to the ZEAL Entertainment, it opened at higher level but could not sustain. If we check the intraday charts on 15 minutes or maybe 10 minutes chart, prices is again retesting is 290 to 89 level. I prefer to buy at current market price. And looking at overall chart pattern, if someone keeps stop loss below 284 and it is restrict at those level, then we can expect second half rally towards 300 level. So definitely I will consider as a buy opportunity at current market price. Another stock you mentioned about the Bank of India, right?
Yes, Kiran.
So on Bank of India, on daily price chart, we are seeing a continuously cup and handle pattern, or we can see a rounding bottom pattern breakout at highest level. Looking at current market price, one can go long at current market somewhere around 120, 121 level. Keep a stop loss below 118. And looking at the rounding bottom pattern breakout, we are expecting price target of 135 in upcoming time. So for Bank of India and ZEAL, both are, if someone looking for the short-term trades, are the preferred field.
Right. Okay. Let me just bring your attention, Kiran, to the auto stocks that are ticking higher. Where would you place your attention, and which is the strongest stock in momentum right now from the auto space stocks? Is it Bajaj Auto, M&M? We are looking at even Eicher Motors and Hero all ticking higher in trade. Which one would you go with?
So we have some different pick on auto only. We are liking Hero MotoCorp at current market price. Reason being, Hero MotoCorp has already given a breakout from flag pattern, and breakout level were somewhere around 3800. After the breakout, we have seen a fair decent rally of 4200. So after 4200, we are seeing prices were trading into the lower top, lower bottom pattern, meaning falling channel, and it retested its 20 days moving average. Today we have seen prices open low is same. Giving a follow-up buying with the volume, and on intraday charts we are seeing prices has formed a bullish divergence on momentum indicator also. So Hero MotoCorp risk reward ratio point of view, it's a very favorable trade at current market price. 39.90 is the current running price. One can go long at 39.90. Keep a stop loss below 39.40. And looking at market at current market price or overall setup, we are expecting prices again to touch 4200 in upcoming time. So Hero MotoCorp on auto sector, it's preferred pick.
Okay, let's look at the broader markets. We are now at 9:25. First 10 minutes have lapsed. Fairly strong opening, as is on most days. On the National Stock Exchange, 1535 shares have advanced compared with 389 that are down. In terms of how stocks are, how indices are moving, we track 19 for you, and out of 19 indices, 17 are in the green. The top gaining index is the Nifty Realty index. There is a very, very sharp breakout on Adani Ports, which Kiran will address in a while. But look at the broader markets. Okay, Sakshi, blowouts happening on the Nifty PSU banking index. Out of 12 stocks, all 12 of them are in the green. The advanced decline ratio on NSE 500, the index that is the biggest index that we have, 0.3% higher, 19,610, record high. 388 stocks are in the green, only 107 are in the red. How about the mid cap and the small cap indices? 0.5% higher each. The advanced decline ratio is 4:1, which means for every one stock that is down, 4 are up. Very, very strong move coming in. I think today will be the day of the index on the Nifty side. Infosys, days high 1523. A very, very sharp move that is coming as far as the other index heavyweights are concerned is also seen. But let's focus on Adani Ports. View from Kiran Jani. Technically, how does the stock look? A record high now.
So honestly speaking, Adani Port is in our favorite list since Diwali, or even I can say after the G20. I'm taking a little bit long time to answer Adani Port. After G20, we have observed that the entire things was behind for the port sector. We have seen a fair decent rally for railway stocks or defense stocks since last 2 years. But after the G20 summit, we are expecting port sector to do similarly like what railway has done and what defense ministry has done. Now coming to the port section, in India only three stocks are available. One is the shipping corporation, another is Adani Port, and third is the JSW infrastructure. Now out of all these three stocks, we are liking Adani Port. And since 800 level, we are giving buy recommendation on Adani Port, giving technical breakouts, multiple technical breakouts. Even at current market price, there is a fresh flag pattern breakout. So aggressively, one can go long. For investment purpose also, if someone is looking for 1 year, 2 year holding, go for Adani Port, any dip, or even shipping corporation if you want to diversify your bet. So both shipping corporation and Adani Port, buy on any dip. Keep now coming to Adani Port stock specific. So Adani Port currently 1130, 1140 is ongoing level. You can buy at current market price. Any dips towards 1100, it's a buy opportunity. Keep a very aggressive stop loss below 1040. And if 1040 is not breakdown, then we are expecting prices to touch 1500 to 1600 level in upcoming time. So for a long-term bet, we are recommending Adani Port at any dip.
Okay, fair enough. Mayuresh, let me bring you in the conversation, and you briefly mentioned before the markets hit open that you're positive on the power space as well. You know, Jeffrey's report on utilities, where it's talking about the tariff draft regulation, it's given a buy rating on NTPC with a target price of 415. Power Grid, it has a 270 kind of a target. CG Power is the one that's moving the sharpest after this report has come out with a 580 rupees target price that UBS has. Where are you really positive on as far as the power space is concerned? If you could name your pecking order in terms of how investors should be looking at these stocks.
So in a nutshell, I think the structural demand is going to go exponentially higher in the next few years. And therefore investments related to both generation, transmission as well as EPC are all going to remain steadfast. Having said that, public utilities like an NTPC, as an example, becomes a clear hold. Because of the sheer dynamics, they are expecting to do 130 gigawatts, a majority of which will be generated by renewables in the next few years, which is a tectonic shift, in my opinion. From the transmission players, obviously I think you've got the ancillary players like a Power Mech as an example. A lot of orders coming through, and it's not just in terms of the EPC part, but also the O&M part of the business related to thermal plants and the renewables, if any. The other ancillary, which is a very expensive stock, but which can do well going forward as well, might be Apar Industries. Kiran just briefly spoke about in terms of the entire renewable space. And this is one of the leading global players, forget local, global players who are into these renewable lines for transmission line for renewable players as well. And one offbeat stock which might not probably get discussed, which can be probably on your watch list, Sakshi, can be a stock called Techno Electric, majorly into substations. And a large part of the market, if the market is not paying cognizance to at this juncture, is this entire theme about flue gas desulfurization. So I think all the plants, specifically thermal plants, will have to go through these stringent norms. And they have to complete that before March 26. There's a significant order book that can come through, almost 98,000 crores in terms of the market size, where only a few thousand crore tenders have been given so far. and the smart meter business as well, where it is part and parcel of that. So substations, part of EPC, you probably got the FGD part of the business, which is huge, as well as the smart meter business, which is also high margin accretive. So something like a techno-electric can
Okay.
be a wild horse in my opinion.
All right, Techno Electric right there. You know what's also taking higher is for the second day in a row, the realty space stocks are buzzing very, very sharply after a 15-year high that it clocked in. The index is also taking higher by 2% again today at 860 odd levels. And you can see macro tech developers now ticking sharply higher by almost 9 odd percent. Phoenix Mills 5% higher, Brigade Enterprises 3% up in trade, Prestige Estates 1% higher in trade, DLF slightly up in trade as well. Overall, Realty also ticking up too. But it's Sobha that's looking at profits being booked at this point in time. Kiran, your view on the real estate space and how are you looking at these stocks that are ticking higher? The strongest one for you?
So overall, large cap real estate has performed very well. DLF we discussed, I guess, 15 days back on the same time, and it was trading about 600. Now it is 740. So at current market price, we are not supposed to buy DLF or Oberoi or Lodha or maybe another stock. But which stock we are liking in real estate? That's Suntech Reality. If you check Suntech Reality, recently stock has started participating in the real estate theme. However, stock price was trading below its all-time moving average, all important moving averages. Recently, stock price has retested is all the moving averages, and yesterday we have seen a superb rally on Suntech with high delivery marking. Again, we check the volumes; it's higher the average 20 days volume. So considering current market price, we were liking Suntech at any dip somewhere around 460, 450 would be the buy opportunity. Keep a stop loss below 430. And looking at current market price, we are expecting prices to touch 500. So overall on real estate sector, Suntech would be the preferred choice at current market price.
चलिए, let's look at the high beta space. And Kiranji, your view coming in on Hindustan Petroleum, HPCL. We've seen fairly strong transactions happening on this one. The price at the moment in futures is 427. Let's look at what the open interest buildup is, and then Kiranji will offer a view on what oil and gas HPCL is doing. Okay, it's the top gainer within the oil and gas space. And let's look at the OI. Let's look at the OI in Hindustan Petroleum. Okay, 1.2% higher. It's a good beginning. Your view, Kiran sir?
So on Hindustan Petroleum and BPCL, both are our in list of buy. Coming to the first, Hindustan Petroleum forming a flag pattern at current market price, and as you mentioned about the open interest, it is a long built up trade on derivative side also. So one can go long on Hindustan Petroleum at current market price. It's a breakout of 3 days range. You can keep a stop loss below 410 and you can expect price target of 440, 445 in upcoming time. However, BPCL would be the preferred choice, honestly speaking. Reason, BPCL has given a fair decent rally from 318 to 458, and since 7th December or 6th December, we are seeing prices is trading in the range of 460 to 440. So the consolidation has happened on BPCL. Now prices are taking upside with the volume. Momentum indicator is also in bullish sign on bullish zone. Slowly and gradually, open is also building up with the long side. So we are liking BPCL at current market price also. One can go long BPCL at 555, 557. Keep a stop loss below 440, and we are expecting the sharp rally on BPCL towards 490 to 500 also. So HPCL and BPCL both are preferred pick. BPCL would be the little higher preference.
All right. That's as far as...
Fair point. Let's look at what else is moving within the Nifty. Sakshi, just a moment, please. The advanced decline is 31:19, which basically means that there is a strength on the long side. The index is up 78 at 21,736. We've passed the first 20 minutes of trade, which essentially means that there is a possibility you might just see strength building up further. What else is happening as far as the heavyweights are concerned? Now, out of 12 heavyweights, 9 are in the green, just 3 are in the red, and the ones that are in the red are ITC, Kotak Bank and HDFC Bank. Okay, HDFC Bank is index heavyweight. one must pay attention to it. But there is strong momentum on the long side. This is really interesting. Kiranji, now your view on 21,700 call on the long side. What would you do, sir? The weekly call.
So weekly call is trading around. Okay, yeah. So weekly call is trading around again 141 only. If we check the 15 minutes chart price, the 21,700 call is forming inverted head and shoulder pattern. And as we discussed, the prices has dipped towards 130 level and now it's trading at 140. So same view, if price comes with 130, 120 level, go buy, keep a stop loss below 100 rupees, and we are expecting price target of 190 to 180. So at current market price or any dips towards 130 would be the buy opportunity. One can take a aggressive bet, keep a stop loss of 100 rupees, and we are expecting price target of 180, 190 today or maybe at least on Monday.
Okay. Mayuresh, we were talking about the power stocks, and Tata Power is moving up very, very strongly. There is a breakout as well in the F&O space. It's up by 3.5% odd at 351 odd levels too. Your thoughts on Tata Power, Mayuresh?
Constructive, because I think a lot of their generation space is expected to do well, and the expectations in terms of renewable energy storage can be a game changer over the next few years. So a lot of the accumulated losses that were happening on a few of their discoms, that should start getting written back at some point of time. And therefore, the new spaces on offer is something that is going to get filled in the earnings perspective of the next few years. So anybody holding should continue on that.
Okay, anybody holding should continue holding on. Well, with that, thanks a lot, Mayuresh, for being with us on this special edition and sharing all your views. Always a pleasure having you with us on Business Today Television. Ladies and gentlemen, what we'll do is we'll take a very, very short break right here. When we return, we'll discuss more stock ideas with Kiran Jani, who's with us. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Market Today on Business Today Television with me, Sakshi, and Shail Bhatnagar also with me. And also with us is our special guest, Kiran Jani, Head of Technical Research at Jainam Broking. Kiran, to you, a lot of stocks buzzing in trade. The one that's catching my attention in the F&O space is JK Cement. It's now the top mover, 4% higher in trade. If you look at that stock, tell us, what is the chart really telling you? And is this a space that one should be taking some bets in?
Yes, definitely. We are seeing that cement stock started upwards rally. Out of cement stocks, ACC we are liking, but our ACC is moving. Probably there is a group action is going on, Adani Group, I mean. So coming to the JK Cement currently we are seeing prices was on consolidation zone. Yesterday we are seeing that prices has given a breakout from that range, and prices also retested its 20 days moving average with higher volume. Now stock price again into the heart of higher bottom pattern. Momentum indicator is also trading into the bullish zone. So we are liking JK Cement at current market price. Any dip towards 38.80, 38.50 would be the buy opportunity. Keep a stop loss below 38.30, and overall chart pattern suggested that prices might touch 4,000 to 4,100 level in upcoming time. So take a little bit positional bet on JK Cement at current market price.
Okay. A lot of IT stocks are also moving higher in trade. Now, the Nifty IT is the second highest mover in the sectoral index, and the performers of the past are coming back. Like, mid-cap IT names like Coforge and even Birla Soft, they are now ticking higher in the broader market space, 2.5–3% higher. Even among the blue chips, you have Wipro that's ticking higher by 2% today. You have Tech Mahindra and you have Infosys that's also moving higher in trade. HCL Technologies is now picking up pace as well. So the IT names are definitely in flavor today. Remember, next week is when we see the earnings season kickstart, with Infosys reporting its numbers as well first. Your thoughts, Kiran, on the entire IT pack, and where exactly would you find more confidence?
So on IT base, we are seeing that a small profit booking is going on since last couple of weeks. But now stock prices again started upward journey. Now most of this large cap IT stock has retested its previous breakout level. So we are liking large cap only. Three stocks we are liking. One is Infosys, another is Wipro, and third is the TCS. So preference wise I said. So first is Infosys. Infosys has retested its ascending triangle breakout level somewhere around 1500. Since 1500 3 days back, now stock is back above 1500. With also moving above is 20 days moving average. So at current market price, one can go long on Infosys or any dip towards 1500. Keep a stop loss below 1480, and we are expecting price target of 1600 on Infosys in short term time. If someone wants to take a bet for a medium term to long term, then Wipro would be the preferred choice. Reason being, a long consolidation pattern gives breakout on Wipro. A long term on long term time frame, we are seeing a long rounding bottom pattern has given a breakout. On daily time frame, we are seeing Wipro is trading above its all moving averages, and it has retested its 440 breakout level recently only. So Wipro is also a preferred pick. Risk reward ratio is favorable on Wipro. So for short term or a medium term view, someone can go long on Wipro at current market price. Keep a stop loss below 440, and we are expecting price target above 500. So Wipro would be the high conviction for as an investment stock. And last for the trading is TCS. TCS and Infosys has a similar pattern. One can go long on TCS at current market price. Also keep a stop loss below 3650, and we are expecting price target of 3800. So Infosys and TCS for the short term intraday or a trading perspective, whereas Wipro for the investment.
Okay. Sakshi, I think it's going to be a big boy day again, just as it was yesterday. We are seeing the likes of Bajaj Finance, ICICI Bank and Axis Bank, giving sharp moves. So let's look at what Axis Bank is doing. It's up 0.7%, 1131. Kiranji will keep a chart ready. And Infosys is now the top gainer, as is TCS. I'm talking about the index heavyweight 10 stocks that I track very diligently. So Infosys is 1.5% higher, TCS 1.2% higher, ICICI Bank is 1% higher, 996, and we have strong gains coming in on Bajaj Finance, about 1% higher. Remember, Bajaj Finance rose 4% yesterday, so the uptick on this one continues. The Nifty is still 70 points higher, 21,727. Now, what else is moving? I think the upgrade on Hindustan Aeronautics has added a very, very strong uptick across the board on defense. Sakshi, I track 16 defense companies. All 16 of them are in the green, led by Hindustan Aeronautics, now 4% higher, 3020. We have BDL 4% higher, 1748. There is a strong move which is seen on BEML, 3.2% higher, 2980. I think, Kiranji, one first quick view on Bharat Dynamics, and then of course Axis Bank.
So coming to the Bharat Dynamic defense stock, it is trading into the low top lower bottom pattern since last couple of days. Now yesterday we have seen a breakout from that falling channel, and it will be considered as a flat pattern based on the intraday chart pattern. So at current market price, anyone can go long. It's aggressive and risky bet at current market price, because on daily chart price we are seeing prices is trading into the extreme overbought zone. However, on intraday price chart we are seeing a breakout, so one can go long at 1740, 1750 level. Keep a stop loss below 1730, and we are expecting price target of 1800 plus in upcoming time. Coming to the Axis Bank, on private sector bank, we are seeing the rally has started since that 3 days. On Axis also, we are seeing a similar pattern. Price is trading above its 20 days moving average, and now considering the intraday chart pattern, it is a double bottom pattern breakout. So one can go long at current market price. Keep a stop loss below 1100, and we are expecting price target of 1160, 1170 in upcoming time.
Okay. Right. Kiran, I wanted to take your view on the insurance space stocks now. SBI Life is ticking higher now as the top mover on the Nifty, 2.4% higher in trade. We also saw LIC in momentum over the last few trading sessions, HDFC Life also ticking higher. Is there a story here to track as far as charts are concerned? Do they show some at least short to medium term momentum?
Yes, so we are liking two stocks. One is the LIC insurance for definitely. Looking at the long-term chart pattern, we are seeing ascending triangle chart pattern and double bottom pattern breakout. We have seen a gap up opening recently on 22 or maybe 23 December, and surprisingly we were connected same day, and we have shared same similar view. I want to reiterate that view that we are expecting insurance, life LIC to move towards 4 digit very soon. So we are expecting any dip, if any dips comes towards 800 level, it would be the buy opportunity. Keep a stop loss below 760 for the positional bet, and we are expecting price target of 1000 rupees. So technically, all the insurance sector, all the insurance stocks are at breakout level. Fundamentally, also this is the last quarter of the financial year, and every people is planning for the taxation, and these are the time where ELSS policies or ELSS mutual fund or maybe the LIC or any insurance, generally people buy to save the tax. So again, a fundamental tailwinds is also there in this sector. So we are liking LIC. Second stock is SBI Life. SBI Life is also trading into the rising channel, and it is also taking a support of its 20 days moving average. So SBI Life at current market price, anyone can go long. Keep a strict stop loss below 1380, and looking at the weekly chart and daily chart, we are expecting price target of 1600. So LIC and SBI Life both are our preferred pick.
All right. Okay, let me just mark a few more prices for all our viewers. On the Nifty, you have now LTI Mindtree, which is from the IT space, taking higher, 2% higher. Wipro comes up in trade. Infosys, Tech Mahindra, HCL Technologies, all up and running. Apart from the IT space, it's also the auto stocks that are taking higher, like Bajaj Auto, that's moving up in trade today. Hero MotoCorp is the one that's moving very, very sharply higher in trade. So it's the IT, the auto stocks, some of the banking majors and financial names like ICICI Bank and Bajaj Finance that are taking higher in trade as well. And of course, when we talk about some momentum picks, including stocks like Adani Ports that already Kiran has mentioned, that's up by 1% in trade right now. Among the Nifty 500 stocks, of course, it's the entire defense pack that's taking away the limelight, HAL. You have Bharat Dynamics, 4% higher. You have BEML, that's 3% higher in trade as well. So the entire defense pack is also attracting some fresh moves in the markets right here. Anything else that catches your fancy, Kiran, the current market setup?
So overall at current market price, we are seeing a private bank is are into the upmove surge. IndusInd Bank we already discussed. I would like to highlight Kotak Bank. Kotak Bank is trading into the lower top, lower bottom pattern. But today we have seen prices is open at lower level, and now it's recovering. So on intraday time frame, if you check 15-minute or a 10-minute chart, the decent low it has made, and with volume price is recovering. So at current market price, we would like to go long on Kotak Bank. 1860, 1870 is the range is going on. At current market price, one should go long. If prices break out somewhere around 1872 for intraday basis, then we are expecting prices to touch 1900 even. So Kotak Bank is a decent trade at current market price, number one. Number two, C8 we have discussed. Though C8 is also again consolidating is 2450 level. We are expecting here a second half should give a fair rally. So C8 and Kotak Bank would be the preferred choice.
Okay, let's look at how the tech space is performing. Sakshi, who had mentioned that the Nifty IT index is the second best gainer. I think we have all-round enthusiasm for tech as far as the F&O space is concerned. Just a moment, I am seeing a lot of moves coming into mid caps. Okay, Oracle Finance. Again, it's slightly high ticket, 4,500 for you, and it's up 3%, but one of those finest IT franchisees that should be a part of your very long-term portfolio. It's up with a very strong uptick on open interest, 6.3% higher. And what's very interesting is that we are only 40 minutes into trade, and the volume on Oracle Finance has actually exceeded yesterday's as far as the F&O space is concerned. So that's a very good point to look at. The stock at the moment at 44.99. Within the F&O space and the IT space, there is Coforge up 2.5%, 61.41 in futures. This is accompanied by a 3.6% rise in open interest. We track 4 plus 4, 12, 17, 18 IT stocks for you in F&O, and all 18 of them are in the green. Naukri.com, which is Info Edge, 5250. Birla Soft, 711. This is a momentum stock, 2.8% higher, and about a 3.6% rise in open interest. So all round decent activity coming in as far as the markets are concerned. And at this moment, the Nifty has retained its first half an hour of gains. That's a very positive development, 75 points higher, 21,735. Sakshi, what are you watching?
Well, Shail, a lot of stocks again from the small cap basket that are ticking higher. We've ignored this space. The mid cap index, remember, is of course third day in a row at a record high again. So the broader markets are throwing a lot of name. Kalyan Jewellers is one stock that I was looking at, 3% higher. It's also come out with a business update. That's the one that's moving higher in trade. Apart from this, there are other stocks like Global Health that's moving up from the healthcare pack. We have VIP Industries, SJVN, that's the one that's ticking higher. Triveni Turbine is moving up in trade. In fact, Jupiter Wagons that I actually talked about in the railway pack, that's also ticking higher by 3% in trade. So let me take, Kiran, your view on the railway space. Of course, this space has been in a buzzing trend. Would you look at the wagon makers like Jupiter Wagons, or would you stay with, say, bigger names like IRCTC, for example, in the trend? What is looking more positive on charts?
So except IRCTC, if you check, any railway stock has given a far better return in last 1 year. You check any small ticket size stock like RVNL, IRFC, it has given a very good return. Now coming to the wagon, you can check Titagarh Wagon or Jupiter Wagon is also given a very good return. Titagarh Wagon was one of the best pick out of all the wagon stock. Jupiter Wagon has started since yesterday. It is moving in the heart of higher bottom pattern. It was on consolidation zone. Prices has started moving higher of higher bottom pattern and is giving a breakout also. So Jupiter Wagon, one can look at current market price or any dips towards 320. It's the accumulation zone for long term. Keep a stop loss below 300 and you can go long. However, IRCTC would be our preferred choice. We discussed today morning also at somewhere around 900 price. Now currently prices is trading about 920. Even at current market price, we are liking IRCTC. We are seeing the tourism theory and everything is running out. IRCTC is not performed either a railway theme or any tourism theme. So the two themes back behind IRCTC plus chart pattern is also very bullish. So IRCTC is one of our favorite pick at current market price. Any if you would like to go long, keep aggressive stop loss below 850 and we are expecting price target to touch 1,000 rupees.
Okay. Fair enough. Let's look at some of the prices right now as to how the stocks are moving. In the F&O space, apart from Birlasoft and Coforge, now Emphasis is also ticking higher, 3.5% up for this one as well. What's also moving in the F&O space, apart from the IT space, is Oracle Financial Services. Remember, this was from the IT space again. Oracle Financial Services Software, that's the one that's moving higher. We have Info Edge that's moving up in trade again from the tech space. That's also moving up. Indus Towers, that's the other one that's moving higher, 3% up in trade. So these are the other some of the other stocks in trade. Oracle Financial Services, do you track this one, Kiran, and would you have a view on this one?
Yes, IT sector, we are seeing prices trading into the height of higher bottom pattern, and we have seen that mid-cap IT were into the height of higher bottom pattern only. Oracle is one of them. We have seen recently, I mean, in September month, Oracle Finance made a high of 4,500. Since then, it was in falling channel, and there was a big time correction and price correction. Both has completed, and stock price is into the height of high bottom pattern, giving a breakout from multiple bullish pattern like inverted head and shoulder pattern, or we can say a flag and pole, or maybe we can consider as a cup and handle pattern breakout also. So at current market price, one can go long. Keep a short-term bet over Oracle Finance. It is not an intraday bet. Any dips towards 4,400 would be the buy opportunity. Stop loss is little far, 43.40 would be the stop loss. And looking at overall chart pattern, we are expecting prices to touch 46, 4,700 in the upcoming time. So keep a time horizon of 1 or 2 months, and you can go long on Oracle.
Okay, ladies and gentlemen, 9:57, and this is a very, very sensible advice. Oracle Finance is not a high beta stock. It is a delivery trade. It does not sort of pay attention to charts and all. It's a fundamentally very strong stock meant for the portfolio for the long term. So don't try to do any intraday gymnastics on it, is what Kiranji's advice is. Let's start wrapping up the market. Sakshi, it's been a good start. We are now at 9:57. The index is almost at its day's high, 21,741 in front of you, up 82 points. The bank Nifty 48,324 for you, 125 points higher. And there is all-round enthusiasm on the long side. The IT index is the top gainer so far, 1.27% higher, 433 points in front of you, 34,842, and strong moves coming in the mid-cap, small-cap, and the NSE 500. It essentially shows that, buoyancy, bullish thought, bullish momentum is on the long side. In terms of what high beta is, it's sticking very well. You just need to look at defense counters to see how strong the move is on the long side. In terms of high beta, you have the likes of Adani Ports making a fresh record high. So this is what the momentum is. And in terms of PSUs, it's the low beta, it's the high beta, low ticket items that are doing fantastically well. So with that, ladies and gentlemen, from Sakshi and my side, this is a bit of a pause. But we'll be joining you back at 2:30 p.m. to take the last hour of trade on Market Today with you. Have a nice day.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. On the show today, we take up that big expectation which became one of the last major policy sort of news announcements in 2023, which was the expected cut in petrol and diesel prices. It's the 4th of January and prices haven't been cut. In fact, Petroleum Minister Hardeep Singh Puri has gone ahead and indicated that such a move may not be happening at least anytime soon. Remember, this is an election year, but we'll discuss more on whether petrol and diesel prices are likely to be cut in 2024. But before we